20th, 2018, Friday. Welcome to the market update. As I record this video, market is closing right now. Market should be closing about 6 minutes. So you're seeing a little bit of flashing lights on your left. Today, let's keep things simple. Let's look at Spider, Diamond, IWM, and the Qs, and we'll call it a day. Not a whole lot happened this week. As you can see, last Friday was what? Last Friday was 13th. So 13th was here around 279. Well, today we're at 279, so we're not a whole lot happened, right? So we've been talking about that Spider did cultivate kind of another new high here. That is a good sign. You can see that that's high. We had a higher high. We actually did not fill this gap completely. Let's actually go to hourly chart and look at this here. We actually did not fill this completely. Let's actually do that, and then I'll annotate it real quick here. So gap, you can see, right? Hold on, let me make sure this is only yeah, not after hours. So gap started, do you see right there? Right there. So gap actually started in February 1st, 2018, or February 2nd. The market opened 281.56. 281.63, 281.63. I wonder if I can make note. 281.63. Nope, there's no 281.63. But at least you know, you can see that box, and if we just move out, yep. So we did not fill that. As you can see there, the gap is not fully filled. So because of that, the gap is not fully filled from it. So then we're pulling back a little bit. I think there's a chance that we could try to come back down. Do you see this kind of light? That's actually 10-year. Do you see this moving average right there? That light blue, really thin moving average. That's actually 10 EMA. That's a 20. That's 50. That's 100 SMA. And that's 200 SMA. So I think there's a good chance. I think we kind of coming down in a controlled manner, as you can see. Come down to hit that kind of 10 EMA, 278 next week, before going back up and filling that gap. I think in the next couple weeks we may see kind of a strong bullish move, but you know, right now 278.32, 275.22, as you can see, that's the level that buyers want to hold. Something we talked about on the last market update video, that bulls don't have any gaps open except these two right here. We got this gap that still remains open today, and kind of pretty sizable gap here on this one that is open. So we got these two gaps currently open, and bulls want to make sure at least one of them remains open. If not, if bears really bring it down, once the gap gets filled, you probably expect the gaps to be, you know, acting as support. I mean, that's what happened here. You can see right there, the gap got filled, and that's what acted as support. But I think at this point, I do think that these gaps are going to be sustained. You know, bulls been opening up a lot of these gaps. Bears been coming it down, filling them. It happened like down here. It happened like here. And bulls just relentlessly opening these gaps, hoping they can hold that. So maybe this time, bulls could really, you know, put up their fight and make sure to defend this level, 278, 275, right? And sustain this gap so we can have the buying pressure going out of it and coming from it. So this downside gap is still not closed. It's actually still slightly open, and this upside gap, which we've been tracking for months really at this point. So let's see if we can fill that gap going into next week, potentially a little bull flag. But again, you guys know this, that I don't put a lot of weight in these short-term flagging action, short-term consolidation, short-term, continuation patterns, because they can go either way. That's why I don't, because I mean, this was actually bear pennant. You know this? This is a bear pennant. That's probably why when a lot of times when people, okay, I'll tell you exactly what happens. A lot of times when the market moves like this, most traders, they miss out on it. So do you know what they do? They start chasing them at the top, right? And then when it starts to decline like this, they close it out at the bottom. And then what they see is like, well, isn't this a bull pennant pattern that I saw in a cheat sheet? Somebody tweeted it out and then I saw it. So then they start shorting it or buy puts, and then it does the opposite. And it happens over and over again. This is why, same thing here, we went up here, and can this be a bull flag? I mean, I'm gonna be fair here. I didn't tell you guys that this is a bull pennant, that I should worry that it's gonna continue lower. I didn't say that. So I'm not gonna say here that, well, this is a bull flag that we're gonna continue on. Even though I'm a bull, I'm not gonna say that, because it could very well just, bears can just bring it down. This is the reason why I don't pay attention so much to minor term movement. I put more attention to intermediate term and primary term, and what the market is doing in an overall perspective. And that's what I bring you every week. What the market is doing in overall perspective. That's something that I've been saying is the market has been basing, right? After we saw a big bullish move, we saw 11% correction, and then we're seeing the basing out period with this stabilizing. And now I think the market is getting into a second gear here, and we're gonna get into a resuming phase. Resuming phase meaning we are in a primary term uptrend, 11% decline, and stabilization, basing period, and then I think we're gonna get into resuming back to primary term uptrend. And obviously some of my targets here, 300 and 2020. I think 300 for sure we can get to this year. 320, 310 possibly, but 320, 340, some of those levels next year. But let's see how we plays out next week. I mean, I think we're gonna keep these gaps open next week. We may come and challenge this. Maybe one of them get filled. But I think bulls. I feel like bulls this time around, they're gonna try and protect this gap. And then we can finally get up here and fill this gap and fill both of these gaps. And once the gap gets filled, we're probably gonna pull back for as that may be acting as resistance, unless we get up here and gap it up or something like that. But the market is starting to look more and more bullish as the day go by, and we've been cultivating faithfully these higher lows there. That's a good sign. 100 SMA is now moving higher. Here, let me make that a little bit, where's my 100? Right, my 100 is setting it low. Yeah, so I made it a little bit darker. So my 100 SMA has been moving sideways. As you can see, it's just been flattening out. For the first time, you're seeing the slight slope to the upside there. Obviously, 200 SMA has been rising to the upside. We got the 20 MA rising. 50 MA has actually been rising since May. 50 MA has been actually rising since May. So these are all good signs here. So, and another good sign is obviously, we are coming out of this base now, right? I mean, that's technically a higher high there. That's higher than this high, right? So that's a good sign. And I think it's gonna take its time, but I think in due time the market is gonna make its move, make new all-time highs. So let's go to diamond. Diamond. What happened to my gaps? There's a gap here, and then there's gap there. That's island reversal. This one. Let's turn that into green, and let's mark that there, right? And then we got this gap and that. So two gaps open on the diamond. Unlike Spider, Diamond has not yet breaking above the late February high. So we're not near this gap here. We're actually down here. So it's obviously significantly lagging, right? Diamond's lagging. You can see Spider's up about 5% this year. Diamond is only about up 1.3%, but we're still trying. We got these two gaps open. Obviously, next level to overcome is this level at 253, 254 level. We are cultivating higher lows, though. That's a good sign. You can see that there. And the 200 SMA is rising. We're now back above all these moving averages. And with that, we also have these gaps open. Again, bulls attempt to open the gaps before as well. You can see there were gaps here and here that got filled. Right? And bulls have another gap open here, 240, 246, 247, and 245, 244. I think these gaps are going to remain open, at least 245 gap. This gap is going to remain open this time. And I think bulls are going to use that to really thrive and throttle to the upside here. So next level, obviously, I think 240, 253, and 257. I think bulls are slowly working towards charging to the upside, getting up here. And diamond is lagging, but I do think the diamond is going to catch up to other indices. Let's go to Russell 2000. Russell 2000 obviously been leading the market here, well above these highs from January and March. And we have potentially a double top or something like that. But the only difference is last time when we got to 170, we saw a pullback this much. But this time we got to 170, we pulled back a little bit and getting back up here. It didn't come all the way down to 50 MA like it did in late June. This time we kind of came down to 20. We're getting back up here. So we're starting to tighten up a little bit. And that essentially is a bullish signal if we do tighten up. But currently we do have a higher lows here. We got all the moving averages rising. I mean, when it comes to primary term uptrend being healthy, and that's what you see on Russell 2000, being healthy, looking at things primary term and intermediate term. In the minor term, you can call it a double top, you can call it a triple top, you can call it a extended, whatever. But looking at the intermediate term and primary term, this is what a healthy uptrend looks like, right? I mean, you can see that. Makes this move, we get pullback, makes this move. I mean, we pretty much digest all year long, makes this move. We see another correctional move, digesting, building base, makes another move, little bit of pullback there. That's what healthy primary term uptrend looks like. It doesn't go straight up, it goes up, pulls back, goes up, and then consolidate, goes up again, pulls back. You can see even here, got up, pull back a little bit, got up, pull back, and then see a steeper decline, and then see another consolidation, basing period, and then gets back up again. And you can see the whole time, the 100 SMA, 200 SMA is tracking there, and dip buyers coming in that vicinity. So Russell 2000 chart is looking very healthy, and I assume that it's going to continue higher throughout rest of this year. One last one, I'll let you guys go. Qs here, Qs. You know, I don't think anybody expect the Qs to continue to move like this. You know, so many people thought that, well, the FANG stocks are so high. I mean, Qs can continue to move higher. This is why you want to give benefit of the doubt to the buyers when you're in an uptrend, despite the fact that we potentially had I've been talking and harping on this for months, if not years, on these head and shoulder formation that the bears have been flopping for years on these Qs here. And nobody knows where the top is, and I just want to continue to give benefit of doubt. At this point, we don't see any topping formation. Nobody knows where the top is at this point. And especially when you're looking at chart like this, where you see this, how the market has been going up like this. Well, we may see a sharp decline here and there, but as far as like this thing correcting like 20% or something like that, trust me, it's not going to just go up and one day we're going to see doing something like that in a week. We're not going to see something like there's going to be some sort of topping pattern or something like that, or any kind of divergence on the, on the long-term chart or something like that. I don't see any of those. And I have to say, I mean, yes, and Qs are extended. I don't know where the top is. And so I want to continue to give benefit of the doubt to the buyers. We've been cultivating higher highs. The thing about it is, last time we made a higher high here, It came all the way down to the lows before finding support. And then we made a new high here. Instead of coming all the way down to the lows, it actually stopped short, very much so, to 50 MA and then made a new high. So can you see that characteristics have been changed in the intermediate term, right? Made a new high, come all the way down to the lows, but then here made a new high. It doesn't come all the way down to the low. It stops short in a prior resistance as new support. It's almost in a perfect way. You can see that even higher lows, 50 MA in that vicinity. Actually, I was thinking that I was gonna buy at 166 because I thought, you know what, everybody's watching this support. Everybody wants to buy at this level. I think the market might roll over a little bit lower, freaks everybody out. Everyone's say, well, this uptrend support has been broken. This is a one big flop. The Qs is gonna crash, and I want to buy that fear. So I was waiting for this to come about 165, which is coinciding with my 100 SMA, which is setting at low. It never did. This time around, what it did was it just kind of find support perfectly at a perfect level where everybody's watching. Prior resistance, new support, rising uptrend support, 50 MA, and then made a new lows there. So I think this was a good, quick short-term trade if some of you guys did, but I'm obviously still holding all of my calls that I went long here, which I have a journal post to I've been updating, but I have to say not a whole lot happened this week, but I think these grindy action is actually favors the buyers. Do you guys remember I talked about this about a month ago or so? These tiny candles, right? When you start to see these tiny candles, that's how you know that the market is trying to slow down, stabilize itself, right? Remember the bears don't like waiting around. They don't like cultivating anything. They don't like resting. They just want to bring it down. This is why when things are very, very difficult and when things are just rough and there's a lot of volatility, you rarely see any of these tiny candles. Do you see any tiny candles? There are a lot of wicks. You see a lot of wicks, but you rarely see a lot of tiny candles. Tiny candles start to show up here, and which I talked about. And this is what I said that this would happen. The tiny candles start to show, and it's going to show again probably here. That's when you know that market is stabilizing, taming the bears, forcing them to slow things down. Because bulls, it's almost like bulls work in a like a slow manner, right? They like to take his time, cultivate these levels, higher lows, and consolidate, build base before moving higher. So a lot of these kind of slow down movement, it's going to irritate hell out of the bears because they have no patience. When I say bears, I mean anybody who's trying to short or who think the market crash is going to happen, trying to buy puts, accumulate shorts, accumulate puts, whatever they're doing. When the markets start to really just moving sideways, it is a very, very difficult for them to wait around. And they live usually in fear that one day, sooner or later, we're going to see this kind of move. We're probably not likely are going to see this kind of one-day decline for a while because now we're stabilizing phase and now we're getting into resuming phase back to its primary term uptrend. So, well, that's it for me. You guys have a wonderful weekend and good luck trading next week.